What's up, YouTube? Welcome to another episode of Trenches to the Riches, baby. We don't want to talk. We just want to make money. So if you got that 2020 vision into the future and you believe your rocket ship is going to the moon, like I believe all my rocket ships is going to the moon, to subscribe to the channel, hit that notification bell, and give a like to the channel. And hit that notification bell to know when we upload a new video. Okay? Now, this topic of the video is going to be about buying a dip in the stock market crash, okay? Everything that's going on in the stock market now. Let's take a look at my portfolio and see what's going on. Now, you see, it's looking nasty. It's looking nasty. Can you handle the heat that's in the kitchen right now? Can you weather the storm? Is you going to stay solid or you going to sell? Are you going to stay 10 toes down? This is a correction, okay? As you can see right here, last year, like I said, over and over again, all the stock market did last year was go up, 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 okay? This is a correction. Things is coming. Some things was overpriced. Some things is oversold right now, okay? This is a correction. Things is correcting. This is the storm that we have to go through, okay? This is the game, and you have to play the game, but you have to stay solid and stay 10 toes down, okay? As you can see, I'm down 15% in my portfolio, okay? Now, I'm guessing, well, I'm not going to guess, but my prediction is it's going to dip a little more to about 16, 17, 18%. Who knows? Maybe 20%. Now, a strategy that I'll give you guys is to nibble. What is buying a dip? What is nibbling? What is your average cost? Why do you want to have the lowest average cost as possible, okay? You want to have the average cost because as low as things go, you want to have it at the low. So when it goes high, okay, you making money. Okay, now you see the chart. Buying a dip, and a falling knife, okay? Now, the difference is between buying a dip and a falling knife. A falling knife is a stock that's at a certain price that's falling, okay? For example, let's say Neil was at $50, okay? And it dropped to $45. In your head, oh, it dipped. Let me buy the dip, which is a good thing. But do not sit there like a crash test dummy and throw all of your money in there at one time, okay? We don't know when it's going to go up and we don't know when it's going to go down. So what you want to do is nibble, okay? Because let's say you're a person, let's say Neil was at $50, like I said, and it dropped to $45, okay? Then let's say it go to $40. Then it goes to $35. Then it goes to $30, okay? Then it goes to $25, okay? That's called a falling knife, okay? Now, what you want to do is nibble. Throw a little bit of hit at 35. Then if you see it has a support system, okay, and it's not going down any farther, then okay, buy it a little more. But if it keep dropping, you want to just take a break from buying. See how far it's going to drop. And then you buy the dip, okay? Be patient. This is a marathon. This is not a sprint. Be patient because you know what can happen? It could be at $50, then it go to $40, and then I'm buying the dip, which is a great thing. You want to buy the dip, but you also don't want to be a crash test dummy. You want to be smart, okay? This is a long-term thing, okay? Now, this is as reference as if the stock market is going down, which it currently is, okay? Now, if you got it at $40 and it dropped to 35, 30, and you cashed out and you bought the dip and you spent all of your money at $40, now when it's at 35 or 34 or $30, you don't have no more money to buy the dip, which is cheaper, which is going to bring your average cost down. Okay, this is what we want. Now let's look at the chart right here. Let's look at the chart. Now, as you can see right here, this is 2020. This is when we first started. Last year, you see everybody made money in the stock market. As you can see right here, the stock market went nothing but up, okay? This is a correction when the stock market either comes halfway down or come down, okay? This is pain. This is people, anybody that bought up here that just went in like a crash test dummy. Let's say you had 10,000 or 20,000 and you just went and spent $8,000 on all your favorite stocks all at once. went out nibbling, seeing if it's going to dip, seeing if it's going to go up, you just threw all your money in, okay? My perspective is throw 25% right then and there, okay? And then watch it. If it go down, throw the other 25%, okay? Then you throw the other 25%. Then you just put your feet up and then just let it go to the moon, okay? So this is where we at right here, okay? This is where we at right here. Let me get a marker, guys. Let me get a marker. Now, let's say you a person that bought it right here, okay? And it dips a little bit more. You bought it around here. Now your average cost is probably in the middle somewhere, okay? Probably in the middle somewhere. Okay? Now, let's say you a person that you bought it here and you bought the dip right here. You threw all your money instead of nibbling. Like I suggest, nibble. What happens if it dip a little bit more? You don't have no more. You don't have no more buying power. You don't have no more cash. Okay? I get it, people. Money don't grow on trees. Money don't grow on trees. We can't buy the dip forever. But what we could do is be smart about what the money we have and spread it out, okay? Now, stop. If you're a new investor, let's say this is your first day investing, okay? Your first day and you go into the stock market. This is not financial advice. I'm just telling you what I would do, okay? What I would do, throw 50% of my money in it right now, okay? If I have 10,000, I'm throwing 5,000 right now. By the end of this week or 2 weeks, I'm going to just nibble on from there on. If my portfolio dropped from 5%, I'm going to nibble. 10% nibble. 15% nibble. You want to nibble. Because none of us is a musician, okay? None of us know the day that the stock market is going to go right back up on us, okay? So let's say it's at 20 and you waiting for it to go to 15, okay? Let's say it never goes to 15. Okay, and you don't buy the dip at 18, 17, and your average cost is real high. And you be like, you know what? I'm going to just wait. And then one day, God just woke up and just said, here, y'all. And they just shoot up to $40, $70, $100. And you just sitting there mad like, I could have bought the dip. Okay? You would have bought the dip, okay? Now, as far as buying the dip, this is why I say you need a consistent income with the stock market, okay? Because times like this, when the dip is going down and down and down and down, okay, you want to have consistent income to constantly just keep buying the dip, which will pay off in the future, guys. Remember me saying this. 6 months from a year from now, you're going to see my portfolio and everything going to be looking green. Everything going to be looking good, okay? You're gonna wish that you bought it at the price you had it at right now, okay? And my button up is open. Cause it's hot in the kitchen, baby. It's hot. It's getting spicy. Everybody's in a negative. Everybody's losing money. Paper losses, y'all. Remember, that's what you're losing, paper losses. We don't lose real money unless we sell. We don't sell on this channel. This family, we don't sell. We hold. You know why? Because we get money. And that's what we get money people do. We hold, be patient. And that's another thing that I told y'all from the first video. Patience. If you want to come in this game and think it's a get-rich-quick scheme that you're going to just throw your money in and, hey, in 6 months, am I going to make this money? Is it a guarantee? No, it's not a guarantee. In 6 months, you're going to make this amount of money. In 3 months, no. Okay? But you can hold and believe in the company that you invest in and let them work. Okay? If they coming out with good revenues and good analysis and things like that, and good feedback on the company about how much sales they're getting, what they're doing to expand, things like that, then stay solid to your companies, okay? The hedge funds is not playing fair, okay? The billions of dollars, the people that have billions of dollars, millions of dollars, okay, they're not playing fair. As you can see, the retail investors, what they call our money, dumb money, okay? We're getting smarter. You see GameStop, you see AMC, you see all them short squeezes, okay? This is retail investors making groups. That's like, hey, y'all, we gonna all come together and throw our money all into this one stock. And if they put in a bet that the stock is going go down, we gonna make a bet that the stock is gonna go up, and we gonna go against them, okay? And they took a lot of people's money from game. They took a lot of these rich people money. What? GameStop and all these hedge funds. So now this is their payback. This is their payback. And they're targeting all the high risk growth stock plays, okay? They're targeting these plays. So what you have to do is just be solid. Ride the storm, okay? A year from now, 6 months, 2 years from now, you're gonna be so happy with the investment that you did today, okay? Now, remember, you never want to sell low, okay? You should buy low and sell high. Let's go over it again. I'm gonna show you a little chart. This is where we at right here, okay? This is where we at, people. You want to get ready for the future, okay? Now, thank you. This is another episode of Trenches to the Riches. Rock with me, like, comment, subscribe, and stay tuned for the next video.